Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, after a subdued start, Yatin, we did manage to stage a very good comeback from the day's low. But, towards the end of the session, we gave up most of the gains. In fact, ending the day in the red, below that 22,450 mark. But we did come very close to that record level of 22,530. However, we failed to defend that 22,500 mark. But, the broader end of the markets continue to see action. They were, outperforming today as well. So, both the Nifty mid and small cap indices firmly in the green, with the small cap index gaining in excess of 1%. The bank Nifty also had a subdued start, but it managed to defend that 47,500 mark and ended the day with gains of somewhere around 0.2%. If you look at the India VIX, continues to cool. It has cooled off further. Another 3% kind of a cool off coming in there, and the advance decline ratio was also tilted in favor of the gainers. As I mentioned, banks saw a good rebound. PSU banks, of course, were shining bright today, and so was the IT pack. There was a CLSA report on IT. There were a few upgrades. On the back of that, we saw good gains coming in on the IT pack after a couple of sessions of weakness. And aside of that, Realty, that pack yesterday hit a 16-year high. Today it came under a fair bit of selling pressure. That was the top sectoral laggard today, and the FMCG sector continues to be in the red. Among the individual movers on the Nifty, you had the likes of NTPC, Divi's Lab, Axis Bank, and as I mentioned, the technology names like TCS, Tech Mahindra, and even Bajaj Finance did well today. On the flip side, consumer names continue to be in the red. Nestle, Britannia, these were among the laggards, and so were some pharma names like Dr. Reddy's, Cipla, and Bajaj Auto, of course, came under selling pressure today after hitting a fresh high yesterday, and Kotak Bank also among the laggards. But Yatin, defense stocks continue to be the flavor in the market.
Right.
Shipbuilders today, were rallying away.
Absolutely, and on an overall basis, Nandita, as you were mentioning in your opening comments, despite the global volatility, the kind of pressure that we have seen on the broader, markets across the globe, Indian markets are quite resilient that ways. And if you look at the advance decline ratio, also it was quite healthy. Mid cap indices, despite the market volatility, continued to gain. In fact, the mid cap indices were up almost 0.5%, and the small cap index gaining by over 1%. In the gaining side, Mazgaon Dock, Kochi Shipyard, both of these domestic PSU defense plays were up 12% and 12%. JSW Energy, and remember the company has opened the 5,000 crore QIP at 510 rupees. That is the kind of SEBI formula pricing which has come in. But today the stock rallied strongly. In fact, the stock ended 7% higher. On the flip side, real estate stocks were under pressure. Lodha down 4%, DLF down 3%, Signature Real Estate, that stock was down 3%. The HDFC mutual fund, real estate fund, has stopped taking lump sum payments because they do believe that they will not be able to manage more funds. And typically last financial year, Nandita, we saw that a lot of mutual funds stopped taking money for the mid cap and small cap indices, or the funds benchmark there. I think it was a knee-jerk reaction for the real estate stocks, but nevertheless, we had a lot of PSU stocks rallying in trade, especially the banking names. Stocks like PNB hit a fresh 52-week high, Laurus Laboratories a fresh 52-week high, Adani Power, BSC, Thermax, Voltas, AB Capital, of these stocks doing well in trade.
That's correct, Yatin. In fact, I was talking to Ashish Sumaya of White Oak Capital AMC in the morning, and he is also very constructive on the realty space. He says that, you need to have some kind of exposure. He certainly has exposure to the real estate space. Even with respect to the mid and small cap indices, Yatin, he doesn't see any kind of a substantial sell-off coming in. In fact, he's pointed out that maybe large caps will outperform mid caps in this leg. But there's unlikely that there could be a big crash coming in the mid and small cap space. After the SEBI diktat, of course, we saw some correction, but he's categorically stated that he doesn't expect a very big cut coming in at the current juncture.
Clearly.
But Yatin, on that note, let's take a look at some of the stocks that are on our radar. Starting with UltraTech Cement. I mean, it was clocking in good gains in the early part of the session, but flattened out and ended the day in the red. It has achieved a major milestone. It has crossed that 150 million ton per annum capacity milestone. Interesting to note that, to cross the 100 MTPA mark, the company took 36 years, but the next 50 million ton per annum capacity was reached in a span of 5 years with an investment of somewhere around 32,000 crore rupees. The company has of course commissioned 2 new greenfield capacities totaling 5.4 MTPA in Chhattisgarh as well as Tamil Nadu, and it is of course in process of closing its $645 million worth of acquisition of the Kesoram Cement business that it acquired, that it is acquiring from Kesoram Industries. Of course, in late March, the company had got the CCI Competition Commission approval for this particular acquisition, and of course it will go through. The deal had of course got thumbs up from the street, Yatin, when it was announced late last year. In fact, the deal would also help UltraTech expand its footprint in the southern part of the country where it doesn't have as much market share. But even Morgan Stanley believes that UltraTech Cement is well poised, in fact best placed in the cement sector to capitalize on the demand upcycle, as well as if you look at UltraTech Cement, it has a good pan-India presence. Of course, as I mentioned, with Kesoram acquisition, it will expand its footprint in the southern part of the country as well. It has also mentioned that it's due to its size as well as strong balance sheet, it is well poised in the cement space. It has an overweight rating on the stock, the target price of 12,000 rupees, which means a 20% upside from current levels. And the focus on capacity market share is critical, given the fact that it is key to achieve higher volume market share as well. That's what Morgan Stanley has pointed out. If you look at the stock on a YTD basis, it has underperformed, but if you look at the 1 year performance, it has clocked in somewhere around 30% gains. Although its PE, valuation wise, it may be a little expensive, but given the fact that the stock has kind of not done very well on a YTD basis, there could be some room for upside from here, Yatin. So all in all, UltraTech Cement, in fact Aditya Birla Group companies remain in focus, Yatin.
Absolutely, and UltraTech Cement continues to remain at the top when it comes to the cement capacity. Obviously, in race are ACC and Ambuja from the Adani Group. But that was about UltraTech. But in focus of pharma stocks, API companies like Divi's Laboratories, Laurus Lab ended at the day's high. Today we had Bank of America Merrill Lynch, which has upgraded the stock of Divi's Lab to a buy after a long period of consolidation. Obviously, Bank of America has not only upgraded the stock to buy from underperform, but the target price also has been increased steeply to a level of 4,025 versus the previous target of 3,380. Now, if you look at the shares of Divi's Laboratories, they have been underperforming clearly because of pricing pressure as well as underutilization of capacity globally. When it comes to Bank of America Merrill Lynch upgrade, they believe that Divi's Laboratories has seen a lot of recovery, and from the recovery cycle point of view, they believe that the downgrade cycle is over, and now growth drivers for recovery are to be seen. Obviously, if you look at the street, 2/3 of the street is still not bullish on the counter, and BofA is now taking contrary view on the stock of Divi's Laboratories.
All right, that was about Divi's Laboratories, but of course, the other stock on my list is Nestle. That's also from the defensive pack, Yatin, FMCG, that has been underperforming of late. In fact, but today as well, the Nestle, that stock was among the top Nifty losers. Of course, there's an MK report on this particular stock. It has initiated coverage with a reduced rating and target price of 2,650, which implies just about 1% kind of uptick or upside from yesterday's close price. Now, Nestle, MK has pointed out that the company is among the prime beneficiaries of consumer adoption of packaged foods and it has also launched a 6,400 crore rupee capex plan over calendar year 20 to 25, which is aimed at enhancing capacity across segments, and which MK believes will help address increased demand as well. Also, the fact that Nestle has been focusing in on penetration-led volume growth, and that has been helping it outperform in terms of volume growth in the sector. Its thrust in the last couple of years has been towards widening its direct distribution in the rural regions, which of course has helped the company maintain superior position in terms of volume growth within the sector. In fact, if you look at the valuations for Nestle, MK says that all these fundamental factors have been already baked in the valuations, and it has also said that it will actually wait for an attractive entry point when it comes to accumulating the stock. It has said that 64x FY26 PE factors in all the strong fundamentals, although it has pointed out that consumption slowdown in the formal sector could be a downside risk, and the re-rating of the stock could be see some pressure because of lower ROE and return on capital employed. Hence, it says that it's prudent to wait for a better entry point when it comes to Nestle. The stock performance, well, on a YTD basis, it is down 6.5%, but it has done well over the last 1 year. It has gained somewhere around 30% or thereabouts. So all the good news or all the initiatives that Nestle has taken by being present in pet care segment to make itself relevant, all this is already factored in according to MK. So we'll wait for some more triggers rather to kind of enter into the stock. That's what MK has maintained.
Absolutely, and Nestle stock was under pressure in trade today. Obviously, Nandita, in a roaring bull market, usually defensives are the ones when the market doesn't reward the momentum. But yes, let's hope that Nifty makes a new all-time high very, very shortly, because after that new level which was made in the first week, we probably have seen some consolidation in the markets. Obviously, the reasons are global, not local, and with the Fin Nifty expiry today and the weekly expiry settling off, let's hope that the momentum returns to the markets.
Well, let's hope so, given the fact that we have been resilient. We haven't really seen any big cut coming in the market, and of course we also have the RBI policy decision on Friday, so that will also sway some bit of sentiment when it comes to the market. But with that, we are completely timed out on this edition of Closing Bell. Thanks a lot for tuning in from me and Yatin and the entire team. Of course, stay tuned to Moneycontrol for all your other news and updates.